Good morning and welcome to the BF Anderson Technical Report for April 25th. Well, we're in earnings season. Things are heating up. The market's hitting new highs. NASDAQ hit a new high. S&P hit a new high. Dow has not hit a new high, but this market is healthy. It's in an uptrend. So let's get right into the charts. As you can see, we started this uptrend on Christmas Eve of last year. We've been working our way higher ever since, making an all-time new high this week. Moving averages are constructive, no problem. Volume has been somewhat low, but as we go into or get through earnings season, we'll probably see volume pick up as we get more certainty as to how these reports come out. And remember, with earnings season, what you're dealing with is the quarterly report card, where the company reports its earnings, its revenues, and also gives some type of feel for projections for the future. So earnings season tends to be volatile, but it can go either way. But so far, so good. Now, on the weekly NASDAQ, you can again see the all-time new high that we eked out this week. However, the volume again is continuing to be low. The 35-week moving average is starting to turn up and is very healthy. The advanced decline line, meaning the net advancers versus decliners on the New York Stock Exchange, continues to be in an uptrend. And as you can see, we've had some really good advancing days versus declining days. The high-low index, we are continuing to see more new highs. We've been pretty much stuck in this area, but as you can also see, yesterday we did have 40 new lows on the New York Stock Exchange yesterday, which is about where we don't want to see that go above that, but we're starting to see a little bit of elevation in new lows, but I really don't think that's a condition to be worried about. More importantly, the long-term trend continues to stay very positive. As you can see here, the S&P did hit the new high. We are in a very constructive pattern here. Long-term, things look very good. Now, on sentiment, I am a little concerned about sentiment. We are starting to, we are in greed. We're not in extreme greed, but we are in somewhat of a frothy area. So, it might be kind of a good idea to kind of sit on a little bit of cash right now, but I wouldn't be too concerned about it. But the problem with sentiment is you can stay in greed or you can stay in fear for an extended amount of time. But it is giving you somewhat of a warning that things are getting a little too optimistic. Now, the main concern I've been having all along has been the small cap stocks are not leading this rally. And that is important. If we could get a breakout on the Russell 2000, which is a small cap index. Now, we don't do, as our investment strategy, we do large caps, we do mid caps, and we have done some small caps. But what this really indicates more to me than anything is that investors, when the small caps are outperforming, it just says that investors are very prone to take on risk. So we would like to see a breakout above 1600. And it just seems to be stuck, can't do it. But the really good news last week and this week has been the strength of the Dow Jones U.S. Railroad Index. The railroad stocks have literally broken out to all-time new highs. And if you think about it, when things are moving around, meaning the rails are moving products around, it means that the economy is healthy and vibrant. So then you link that with the industrial sector, which is the industrial sector fund. You can also see it too is in a very strong uptrend and breaking out. So the industrial sector is making things and the rails are moving things to the market. So that's somewhat called a Dow theory buy signal. Looks good. So let's get into the top five. Now, last night we had two earnings reports that I'll talk about today. Chipotle announced earnings. They were very good. They beat estimates. Everything looks good for the company. We got a pullback in the stock due to some analyst downgrades based on valuation, but the stock is looking healthy and actually looks like it may give a new buy signal this morning. We got very healthy volume on the stock yesterday. Now, semiconductors continue to be strong. This is Cree. Cree is in a very strong uptrend. Volume pattern is positive. Their big product in the old days and continues to be is LED lighting, but they've also gotten involved in 5G technology. Now this is another stock that's a software company, hit an all-time new high on very good volume pattern. Okta, I used to pronounce it Okta, it's pronounced Okta like octane. They're basically into cybersecurity, and they're very big into identification management, which is a big breakthrough in cybersecurity. Now, here's a stock that's very interesting, and I want to mention something about 5G technology. This is Qualcomm. You can see a tremendous gap up on skyscraper volume. I mean, we're talking 150 million shares traded that day for a stock that normally trades 19 million shares a day. Now, what happened that day? Well, it just so happened that Apple and Qualcomm have been in a patent war in the courts, and they decided to settle. Well, the stock gapped up on the news and has continued to rally, has held the gap, and is actually making new highs. Now, why this is important is the 5G technology, the biggest beneficiaries of the build out of the 5G network is going to be semiconductor chips. It's going to be a bunch of chips because you've got to have these mini towers every 1,000 feet, and they're all going to have chips on them, and then you're going to have new phones that are going to have the 5G chips. Now, you have to divide this into two categories. One will be infrastructure category, and the other will be the chips that actually go into the devices that receive the signal, such as your iPhone. Well, Qualcomm would fall into that category of the chips that would be in the devices that are receiving, and then we'll talk here a bit about Xilinx. Xilinx is more involved in the infrastructure chips. So the problem with the receiving chips is that we really don't know who's going to win these contracts because the phones just aren't out there yet. So when Apple comes out with its 5G phone, it could be Qualcomm, it could be Broadcom, it could be a variety of companies. Now Xilinx reported last night. Stock rallied hard going into the earnings report, making an all-time new high. Now I'm checking on the price this morning. The stock is down. They missed earnings by 2 cents, but they beat on their revenues. I would play your normal hand here. I think the stock is going to pull back. More than likely, it's going to pull back into this area here. Let's just see how it unfolds. But play your normal hand, which would be set a stop loss if the stock continues. If this is more than a one-day drop, we're going to need to stop out of it. But if it's not, then we'll just hang on to it. So all in all, the market is looking very healthy. Let me know if you have any questions. Thank you very much.